Fine. Okay. Uh, Coming back to this, what we have done last class, we have done, this is the only thing is there. You should be clear, we have completed the concepts. We have done with respect to the temporary difference will be there, and we will come across with respect to the tax base. What is the carrying amount and what is the tax base? Okay, little bit recollect what we have done in the chapter 2, okay, revaluation. Is that now what happens, what we have done in chapter 2, now it will help us whenever there is a revaluation. Is that whenever there is a revaluation, what you are going to do as per IFRS, is that as per IFRS 13, whenever there is a revaluation, is that whenever we will take the revalued amount. Okay, we will take the revalued amount. When we take the revalued amount, is that when we are taking the revalued amount, definitely the current value is going to be the Assalamu alaikum Hussein.
Walaikum salam, Iftar, how are you?
Fine, Alhamdulillah. Is that we will take the revalued amount. When there is a revalued amount, again there will be a, what will happen? There will be a revaluation gain. Is that there will be a revaluation gain or there will be a revaluation loss. Is that there will be a revaluation and gain or there will be a revaluation loss. On this revaluation gain and on gain especially, we have to pay the tax. This is what we are going to do. The first part is with respect to the non-current assets. What we have done with what is the carrying amount, what is the tax base, and what is the temporary difference. As seen in chapter 2, understand what? Go back to chapter 2. It is permissible to revalue non-current assets to the fair value. Is that when the revaluation takes place, the carrying amount of the asset will be changed, but the tax base will remain unaffected. Is that this is little bit we have to think in terms of taxation also. Is that you have done that paper, if you recollect little bit, they will have a tax deductible allowances. Okay, on they will give allowances with respect to the plant and machinery. Is that they will, the rules will be separate for the taxation and the rules will be separate for the accounting. Is that taxation rules we have to apply whenever we are talking in terms of property, plant and equipment. The difference between that, whenever there is a revaluation, the difference between the carrying amount of a revalued asset and its tax base is a temporary difference. What we have done, as simple as that. Okay, and it will definitely, if there is any gain is there, on that gain we have to pay deferred tax. Okay, we have to defer tax, which will be taken to the revaluation surplus. Where we are taking the revaluation surplus, we are taking the revaluation with surplus with respect to other comprehensive income. The same process what we have done in chapter 2, the same thing which we have to. Only thing what we are adding the element of the taxation. They gave you some reading. Deferred tax should be recognized on revaluation gain, even there is no intention to sell. Is that you have to recognize the deferred. Even there is no intention. If there is a revaluation gain, you have to think about the deferred tax. The revaluation of non-current assets is taxable temporary difference. Results in a taxable temporary difference. Hence, deferred tax liability arises. Okay, and deferred tax liability arises. Just I am leaving this. It is therefore disclosed that the statement of profit and loss account and OCI or in a separate, we have to show in the profit and loss account and OCI, or you have to show separately on the OCI. If there is any tax losses, is it? Tax losses may generate on deferred tax because if those losses are carried forward, If you remember in taxation, is that we can recover tax losses for the next 3 years. Sometimes what will happen, we can recover, if it is a sole trader, we can recover tax losses for consecutive years as such. Is that we can recover previous year losses as well as future. First we have to recover previous year losses, then we have to recover next year losses. Okay, those are the things that happen in the taxation. The same thing happen, is it? The same thing. Tax losses may generate deferred tax asset, because if those losses are carried forward, it will result in a reduction of future tax payable. Okay, any tax losses is there, we can recover in the future taxable profits. In such circumstances, we should skeptical. We have to be very careful with respect to projected profits from the historical loss-making performance. What they are saying, how we have to think in terms of profits and losses. The asset is equal to the tax losses expected. Means again we cannot recover, or we cannot calculate more than the tax losses of the previous year. All those things are applicable. Okay, just I am going through it because it's a reading one. Fine. Now they have given a same on the same concept in terms of revaluation. On January 1st, decided to revalue its land for the first time. A qualified valuer reported that the market value of the land is how much? 80,000. The land was originally purchased 6 years for 65,000. Fine. The income tax liability for the year is 19,400. The difference in the carrying amount, including the revaluation land above and the tax base, is 27,500. The opening balance is this much. Rate of return is how much? 25%. What they are asking us, they are asking you the extracts of the how it is going to impact the taxation. Fine. Now, if there is any revaluation, is that if there is any revaluation, we have to work according to its structure. What they are saying, they have given you the opening balance, is it right? See, the difference between the carrying amount, see, when they have revalued it on 1st January 2008, is it right? They have decided to revalue the land for the first time. What is the market value? Market value is 80,000. And it has, what is the historical value? Initial value is 65,000. Initial value is 65,000. Next, the income tax liability. Is that this is with respect to the asset. The income tax liability, right? Income tax liability is how much? As on 31st December, at the end of the year, is it 31st December 2008 is how much? 19,400. The difference between the carrying amount of the assets including revaluation and the fair value. Well, how much is the temporary difference? How much the difference between the carrying amount of the net assets of the assignment, including revaluation of the land above, and the lower tax base is how much? Difference is how much? Difference is 27,000. The opening balance is how much? Opening balance is 2,600, and the rate is how much? Income tax rate is 25%. what we have done in the last class? In the last class, we have taken the temporary difference. Is it right? We have taken the temporary difference. See, what we have done, we have, what is the temporary difference? The difference between carrying amount and the tax base. Is that the difference between carrying an amount and the tax base? Temporary difference. On the temporary difference, we have calculated the tax. Okay, on the temporary difference, we have calculated tax, and we will see what is the, whether there is a increase or decrease in, tax. This happens in the previous case of step 3. Is that in the previous case of step 3. Now same process we will follow here. Okay, same process we will follow here. Working 1. Is that working 1? What is the, first we have to calculate what is the deferred tax. The difference between the carrying amount of the net assets of Simon and the tax base. What is the difference is there? The difference is how much? The difference is temporary difference. Okay, the temporary difference is how much? The temporary difference is 27,000. Is that? I will write here the temporary difference. Temporary difference is 27,000. What is the tax rate? The tax rate is temporary difference multiplied by tax rate multiplied by 25%. It comes to how much? 13,000. 13,000 divided by 2, it comes to 6,750. Check. Are you understanding what we are doing? First, we have to take the temporary difference. Is a temporary difference? They are already calculated it, 27,000. On this 27,000, we calculate the tax rate, 25%, 6,500. See, the open. Are you clear about this?
Yes, doctor.
Is it? See, first you have, see what they say. There is a, there is a temporary difference is how much? 27,000. Tax rate is 25%. It comes to 6,750. There is a opening balance is there in the deferred tax account. How much is the opening balance is there in that deferred tax account? There is an opening balance of 2,600. Is that minus opening balance? Is that minus opening balance? How much is there in opening balance? 2,600. If you take 2,600 off, it comes to how much? It comes to 150, 4,150. This much tax you have to pay during the with respect to the deferred tax. Is that this much? There is an increase in deferred tax. First you have to calculate the temporary difference already given into the tax rate 6,750 minus opening balance which has been there in the account 2,600. This is nothing but increase in deferred tax. Is that increase in deferred tax? Fine. Now, when there is how much is there? 4,150. Fine. Increase. Now they are asking us. Fine. Now they are asking us. This is the total increase. I can put it the total increase. In the total increase, how much is related to the land and how much is related to other components? Okay. How much is related to land? What is the increase in value of land?
80,000.
No, increase in value of land. First paragraph. How much is there increase in value of land? Increase in value of land is how much? 80 minus 65. 80,000 minus 65,000. What is the increase in value of land?
15.
15,000. On this 15,000, is it right? I will write increase in value of land. Okay, in terms of revaluation. Is it? In terms of revaluation. How much is there? 80,000 minus 65,000. It comes to how much? 15,000. On this 15,000, there is a tax rate. How much we have to pay tax? At the rate of how much? At the rate of 25%.
25.
Is that on the means what will happen? In this case, what is the deferred tax? Deferred taxes will be how much? 15,000 times 25%. It comes to
375.
3,750. Is it 3,750? Now
Oh.
see the thing. The tax due to revaluation, is it? The tax due to revaluation that happens, is it? This has to be shown in other comprehensive, reported in other comprehensive income. The balance sheet total is how much? 4,150. Is a total increase in tax is how much? 4,150. 4,150 is that increase in deferred tax. How much the tax related to land? 3,750. Is that? Now, again, simplification, okay? Total increase in deferred tax is how much? Total increase in deferred tax is 4,150. Is it? Deferred tax related to land is how much? Related to land is 3,750. This has to be shown in OCI. Now, what is the difference? What is the difference? Difference is 4,150 minus 3,750. How much is there?
400.
How much is there?
400.
400. This 400 should be shown in profit and loss account. Is that this 400 relates to what? Profit and loss account. Are you clear about this? Total increase in deferred tax is 4,150. Deferred tax related to land is how much? 3,750. Means 3,750 will be in the other, reported in other comprehensive income, and the balance 400 is profit and loss account. Here they have mentioned what is the income tax liability for the year ended is how much? 19,400. Is it right? How much this is? Okay. Next, what is the working to? Working to is, first working is deferred tax. The second working is what they are saying? They are talking in terms of income tax liability. See, income tax liability. Income tax liability, they have mentioned here. The what is the balance is there as on 31st December 2008 is how much? 19,400. Is it right? Increase in deferred tax, how much? Increase in deferred tax to be shown in profit and loss account. Okay? To be shown in profit and loss account. Increase in deferred tax is how much? 400. Total, what is the income tax liability? 19,800. Is it clear to you?
Yes, doctor.
Is it? Is it clear to you? Yes, Hussein, is it okay? Sumaya?
Very clear.
Okay? Very simply, we have to make it more specific when you are doing. Now, once you have done this, nothing is there. Okay? Nothing is there. Income tax, how much you have to, we have to show only the extract. Okay? We have to show only the extract. Now you will understand. Okay? Now you will understand how the things will work. Is it right? Is that statement of profit or loss? Only extract, okay? Only extract. How much is their income tax expense? Income tax expense is how much? Income tax expense as per working 2. Is that how much is the income tax expenses? 19,800. Is that 19,800? We have to show separately, okay? We have to show separately. Now, OCI, other comprehensive income. How much is the revaluation gain? How much is the revaluation gain? Revaluation gain is 80 minus 65. Okay, it comes to how much? 15,000. Okay, 15,000. On from these 15,000, what we have to do? There is a gain of 15,000. On this, we have to deduct deferred tax. How much we have to take deferred tax? 3,750. If you take deferred tax 3,750, how much is the net revaluation gain? Net revaluation gain is 11,250. Are you understanding what's happening?
Can you repeat the last, Doctor? The last.
See, we have got how much revaluation gain we got it from the land? 80,000 minus 65,000. Is it right? 80,000
yes.
minus 65,000. How much revaluation gains? 15,000. Is it right? Now,
Yes.
on this 15,000, you have to pay tax.
Yes.
Is it? You have to see, they have mentioned
yeah.
whether you are selling or you are not selling, you have to pay tax. Is it? Whether you are selling or you are not selling, you have to pay tax. 15,000, on 15,000, what is the tax rate we are paying? We are paying tax rate at the rate of 25%. Is it right?
Yes, Doctor.
Is it
yes.
right? We are paying tax at the rate of how much? We are paying tax at the rate of 25%. When you are taking tax at the rate of 25%, how much you will get? 3,000. The gain is 15,000, but on that gain you have to deduct the tax which you have to pay, deferred tax, and the net value we will take it in the OCI is how much? 11,250. Means we are showing two different things. Now I will just go it from the beginning once again. Okay, once again I will go from the beginning. First, what we have done, we have taken the temporary difference, 27,000 to 25%, 6,750. Okay, opening balance is there already. We remove opening balance. What is the net increase is there? Net increase is 4,150. Okay, 4,150. In 4,150, there is something related to profit and loss account. There is something related to OCI. Why it is related to OCI? Because we are there is a revaluation gain on the land. Is that there is a revaluation gain on the land? When there is a revaluation gain on the land, is that there is a revaluation gain on the land? How much is there? You have a 15,000 is there gain, revaluation gain, 25%. The amount is going to be how much? The amount is going to be 3,750. The 3,000. This is exclusively related to land deferred tax. Total increase is 4,150. Related to land is 3,750, which you have to show where? Which you have to show in the OCI. Okay. Any revaluation gain with respect to property, plant and equipment is a long-term asset. Now, we have 3,750 and the balance is how much? The difference 400 is going to be in profit and loss account. Now, what we are doing, we have to know how much we have to show in the profit and loss account. In the profit and loss account, income tax liability, they gave income tax liability of 19,400. Okay, 19,000. Now what we are going to add? we are going to add anything which is related to the current year with respect to deferred tax. We have the difference 400 which you have to show in the profit and loss account. How much is the income tax liability in the profit and loss account is 19,800. Fine, 19,800. Whereas revaluation gain, how much you got it? 15,000. On 15,000, how much you have paid deferred tax? Deferred tax at the rate of 25% is, we have paid 3,750. What is the net amount after tax with respect to land and buildings? With respect to land is how much? 11,250. Is it clear to you?
Yeah, doctor. Yeah. Doctor, statement of profit and loss extract. The down one, which one? This one? Income tax. Down second line.
Huh.
Income tax
Expenses.
expenses.
Income tax expenses. Income tax expense. Now how we have to show? This is we have done with respect to profit and loss account. How we have to show in statement of financial position? Can you tell me please? Anyone? Anyone? The same thing what we have done in chapter 2. How much is the non-current assets? How much is the non-current asset? What is the value of the land we will take now?
After the revaluation.
After the revaluation. What is the amount is there?
37.
No. Value of the land.
Yeah. 80,000.
Value of the land is how much? 80,000. Okay? Value of the land is how much? 80,000. Fine. Next. In the equity. Is it right? In the equity. In the equity. Okay, this is over. This is the first part is over. Is that in the equity? Is that we will say revaluation gain. Is it? We say revaluation surplus. How much will show revaluation surplus?
15,000?
No. 15,000 minus 3,750. We have paid tax
Minus
now?
tax. Yes. Yeah.
11,250. Okay? 11,250. How much is the deferred tax?
4,150.
How much is the deferred tax? Temporary difference. How much is the deferred tax?
6,750.
6,750. Is that deferred tax is how much? Where we are going to show deferred tax? We are going to show deferred tax in non-current liabilities. How much is the deferred tax? Deferred tax is 6,750. Okay, deferred tax is 60. It includes the tax for the land as well as the amount which has going to be shown in the difference. It includes 4,150 plus the opening balance plus the 4,150 includes land as well as the difference. Now, what is the current liabilities? In the current liabilities, how much they have mentioned income tax current year? How much they have mentioned income tax current year given in question? How much is there? How much is it given in the question? How much is the income tax current year? The income tax liability, see the second paragraph, first line. The income tax liability for the year ended 31st December 2008 is how much?
19,400.
400. Is it 19,400? Are you understanding how it's happening? Means we have taken the non-current assets. Is that we have taken the non-current assets, we have taken the equity, we have taken the non-current liabilities, and we have taken the current liabilities. Okay?
Okay.
Is that? This is directly we have done here. Okay? This revaluation surplus is nothing but 15,000 minus 3,750. Are you okay with this?
Yes, doctor.
Okay. Yes, Hussein and Sumaya. Is it clear to you?
Yes, doctor.
Yeah, doctor. We need practice.
Huh?
We need practice.
Fine. It is there. Still more questions are there now. Still more questions are there. Okay. Now, the moment you go on down the line, you will automatically get practice. Okay. We will have practice. Tax usually forms part of published financial statement question in the examination, and you may find it helpful to use the following workings. This is what it says. Year-end estimate given in the question. There is under provision or over provision will be there. Increase or decrease in deferred tax will be there. Is that increase or decrease in deferred tax? Expenses to profit and loss account. We have taken plus. This is for the current year. Deferred tax will be there. Statement. They will give you statement of finance. This is what we have done. What we have done on the right hand side. The same steps we are referring on the left hand side. You have the temporary difference times tax rate. Okay, there will be an increase or decrease in deferred tax. Fine. We have to show related to either statement of profit or loss, or we have to show in the OCI. Is right? Now the next question when you are doing, remember what we have done. We are not going to change the steps. We are not going to change the rules. That's very clear. Is that? That's very clear. Now, they have given you a trial balance. Okay. Now you are covering all the things which have been done. Is that they gave you the trial balance. They will give so many things. They say land cost is how much? 5,000. Revalued how much? 11,000. First you read the requirements. What they are asking us: prepare statement of profit and loss account and OCI. Is it right? And the statement of financial position and the statement of changes in equity. Is that a very comprehensive revision what we are going to do now? Okay, a comprehensive revision with respect to profit and loss account, OCI, statement of financial position, statement of changes in equity. We are covering all four. Is that we are covering all four. There is next. After that, go to the land that cost 5,000 to be at 11,000. Definitely on this we have to calculate deferred tax. The balance on the income tax account represents an over provision. Is that the balance? How much is the balance of the income tax account? It has been given. See that the income tax over provision. How much? 500. Is that 500? The income tax for the current year is how much? 3,000. The deferred tax is increased to how much? 8,600. Closing inventory is valued 16,000 at cost for the year. Included in this amount is inventory. Closing inventory is valued at 16,000 at cost for the year. Included in this amount is the inventory cost 8,000, but during the inventory count it was identified that these goods has become damaged and a result of selling price was reduced. The goods are now believed to have a selling price of 4,500. and there is a incur after recovering some cost of 500. After recovering some cost of 500. Fine. What we'll do, tell me. Land cost is how much? Land cost is how much?
5,000.
5,000. Is that revalued to how much? How much is the revaluation gain?
11,000.
Gain, no. Gain is how much?
Different.
How much is the
Different.
gain?
6,000.
6,000. Okay, how much is the gain? 6,000. Fine. Fine. 1 minute. They gave you revenue, purchases, distribution cost, loan interest, fine, this fine, okay. Fine. We will start with, we will have very constructive approach, okay. We will start with, I will take some space here, okay. I will take some space here. I will put like this. Fine. On the right hand side, it is statement of profit or loss and OCI for the year ended. December 2001. Any workings are there, I will do left or right wherever, but I will specify clearly that what are the workings we are doing. Is it? What are the workings we are doing? Particulars, amount and amount. Where we have to start? First is what?
Revenue.
Revenue. How much is the revenue? Revenue is how much?
50,000.
50,000. Is it? Revenue is for 50 minus
Cost of sale.
cost of sales. Put working one. Okay, put working one. Once we have done, put one small tick here. Okay, small cross here, so that it will be easy. Is it? Work cost of sales. What is the formula for cost of sales?
Opening inventory.
Opening inventory. Okay, you have. See, I will put it like here. Okay, working one, cost of sales. Opening inventory is there. Check. Inventory as on, how much is the opening inventory? 8,000. It is there.
8,000. Yes.
8,000.
Is that how much is the opening inventory? Opening inventory is how much?
8,000.
Opening inventory is how much? 8,000. Purchases is how much?
20,000.
Purchases is how much? 20,000.
Okay.
Okay, 28,000. Is it? 28,000. The issue comes in the closing inventory. Okay, minus closing inventory. Is it right? Closing inventory. Note 4. Okay, note 4. Closing inventory is there. What is the closing inventory? What is the problem of closing inventory? Closing inventory is valued at 16,000. Okay, closing inventory is how much? It is valued at
Six.
16,000. 1 minute. 1 minute. I will put little bit 8,000, 20,000. It will become 28,000. I will remove this. Okay, I need space here. Is that closing inventory is how much? Closing inventory is 16,000. Okay. What happened to closing inventory? Tell me.
Including the 8,000.
Is that what happens to closing inventory? Read the thing. You have to tell me, okay?
Yeah.
I am here to support you. You have to tell me how we have to work it on.
They are saying closing inventory is valid 16 at the cost of their, including this amount, is inventory opening,
That
8,000.
the cost of 8,000, but during the inventory that it was identified that these goods have become damaged. It has been damaged, okay? It has been damaged. Damage means you have to remove it. Is it right? Minus.
We have to.
See,
Yeah.
you have, don't get confused. Is that damaged goods?
Damaged goods, yeah.
Damaged goods. How much is the damaged goods? 8,000.
8,000.
Okay, 8,000 is the damaged goods. Now, they are
Selling price.
net realizable value. Understand my point? Net realizable value. IS2. Is that IS2? These goods are, how much is there? 4,500.
1,000.
But it will have, after paying how much? 500. Means the net realizable value will be how much? The net realizable value will be 4,500 minus 500. It comes to how much?
Yes. 4,000.
4,000. Is that? It comes to how much? 4,000. Fine. Is that net realizable? It is what we are getting. Add net realizable value 4,500 minus 500. Add. Okay. You have to add. Means you are getting. See, you are selling. You are getting the. You are recovering the amount. Is it right? You are recovering. How much is there? 4,000.
1,000.
Is it right? Now, how much is the closing inventory?
16 minus 8, 8
4,000.
minus 4, 4.
12,000.
4,000.
16. 16.
Minus
16
minus
minus
8,
8. 8. 8 plus 4, how much?
minus- Yeah, plus 4, 12.
12,000. Understand this. If you understand this now, automatically you will not have any issue. This is the extreme difficult adjustment. I am telling you this. Is it? How much is there? 28 minus 12. It comes to how much? It comes to 16,000. This is going to be called as cost of sales. Is it clear to you?
Yes, doctor, clear.
Is the extreme. This is the difficult adjustment I can put it. Is it right? This is the difficult adjustment I put. How much is there? 16,000. 34,000. This is what 34,000. 34,000 is your gross profit. Is it okay?
Yes.
Fine. Now, next, what we have to do is that we have taken purchases also. Put cross mark. Distribution cost. Is that distribution cost? How much is the distribution cost? 10,400. Is that distribution cost? Put one cross here. Is it right? You have administration cost. Admin cost. Is it admin cost? How much is admin cost? 15,550. Put one cross here. How much you will get? $34,000.
8050.
Huh?
8050.
8050. This is called as
Operating profit.
operating profit or profit for operations. Both are same. There is no difference at all. Okay, there is no difference at all. Next, what we have to do? Minus
Finance cost.
interest expenses. Okay, finance cost. How much is the finance cost?
400.
Finance cost is how much? 400. Okay, finance cost is how much? 400. Anything else?
There is 10%.
See, how much is the loan amount? Loan amount is how much? Loan amount is 8,000. Okay, they have mentioned anything, the balance, income tax, nothing is there. This is one thing you have to note down. Okay, how much is the loan? 8,000. Okay, 10% means what is the interest you will get? 10% into 8,000, it comes to how much?
800.
Is it right? 800. Is it right? Finance cost. How much is there?
800.
800. Okay, finance cost is how much? 800. But 800, how you have to split it? 400 you have paid. Okay, 400 you have paid. Fine. You have paid how much? You have paid 400. Outstanding is how much?
400.
400. That outstanding where we have to show?
In
And
position.
finance cost.
No. Yes, finance cost we will show.
Yeah.
But apart from that, where will show?
Current liability.
Yes. Is that finance cost? 10%. Okay. On how much? On 8,000. It comes to how much? 800. Paid. How much? Paid is 400. Okay. This you have to show in profit and loss account. Is it right? Now 400 outstanding. Is it 400 outstanding, not paid? This you have to show in current liabilities. Understand? This you have to show in current liabilities. Working 2. How much? Finance cost 800. Are you clear about this?
Yes. It's the same one that loan notes, right?
Yes. Yes.
It's
Loan
the
notes.
same working, no?
Yeah. Loan notes.
If we refer back to that calculation, it will be also same.
100%. I'm just writing for your understanding. Okay.
This is shortcut. But we used to do that actually. So
No, bro. See, is it you put workings? You put for workings automatically they will give. Okay. Are you clear about this?
Yes, doctor.
8,050 minus 800. How much you will get? 7,250. Is it right? 7,250. This is called as profit before tax. Is it? This is called as profit before tax. Now the actual things will start here. Okay. The actual things. How much is the income tax expenses? Income tax expenses are how much?
Income tax estimated 3,000.
500.
How much is the income tax expenses? Think.
500.
They have done over provision. Okay, they have done over provision. Over provision means they have provided extra provision last year. Okay, they have provided extra provision last year. How much they say? See the things. The balance of income tax account represents over provision of the previous year. How much is the income tax provision? Is 500. How much is the over provision? Over provision is 500. Is that over provision is 500. Now, how much? What is the current year estimate? Current year estimate is 3000. Is that
3,000.
current year estimate is 3000. Okay, current year estimate is the deferred tax is to be increased to how much? 8600. How much is the deferred tax? How much is the deferred tax? Deferred tax is how much? 8000. 8000 is the amount. They have to increase to how much? Increase to 8600. Means 8000 to 8600. How much you have to increase? You have to increase only how much?
600.
600. Wordings are very important. Okay, they have to increase to how much? 600. Fine. Okay, now I am writing here working 3. Is it right? Working 3 deferred tax. Is that I will put, no, I will not put deferred tax, I put income tax. Okay, I will put income tax. Fine. Now income tax trial balance. Is it right? Trial balance over provision. Is it last year over provision? How much is the last year over provision? Last year over
500.
provision is 500. Okay, next, plus current year estimate. Is that current year estimate? How much is the current year estimate? 300. Sorry, 3000. Is it
3,000.
3000? Is it note 2? Is it right? Is it? It is comes where? It comes in note 3. Is it? It comes in note 3. Fine. Next, increase in deferred tax. Is that you have to increase in deferred tax. Is that right? From 8000 to 8600. Is that from 8000 to 8600? How much? 600. How much? 600. Means how much is the total amount? 3000 minus 2500 plus 6600. It comes to how much? 3100. Is it clear to you? Trial balance, they gave over provision 500. Okay, current year how much estimate? 3000. Over provision, last year they have made over provision. Okay, definitely last year there is some credit balance is there with you. Now you will take the current year balance, any increase is there, 3000 plus 3600 minus 500, it comes to how much? It comes to 3100. Is that this much is your income tax expense? Are you clear about this?
Yes.
Fine. Income tax expenses. Working 3. How much is there? 3100. Minus. It comes to how much? 7250 minus 3100.
4150.
4150. This is profit. Profit for the year.
Tax.
Okay, next. Now the things will start slowly moving. Okay, slowly moving, it will make sense. Okay, now OCI, other, you can write OCI, nothing will happen. Okay, other comprehensive income. Other comprehensive income, how much is the other comprehensive income? They say Point number 2 is how much?
Evaluation.
Gain is how much?
6,000.
Is that other comprehensive income, revaluation gain? Is it right? Revaluation gain 11,000 minus 5,000.
Fine.
Is it 11,000 minus 5,000? I will write note 1. Is it note 1? How much is there? 6,000.
6,000.
Is it 6,000? It comes to how much? 10,150. Total comprehensive income. Is it okay?
Yes.
Next. Statement of changes in equity. Is there statement of changes in equity? What is there? Share, what they have shared. See the things. You have the share capital, you have the share premium. Is it right? You have the revaluation surplus, you have the retained earnings, you have the total. Is it there?
Yeah.
Is it right?
Yes.
Fine. Now opening balance is how much? Opening balance, share capital is how much? Opening balance
8,000.
8,000. Share premium is how much?
3,000.
3,000. Okay. Share premium is how much? 3,000. Anything is there?
Valuation surplus.
Revaluation surplus. How much we got it? 6,000. 11 minus 6. 11 minus 6. Revaluation surplus. How much you got it?
5.
11 minus 5. I am putting
Six.
here on the left hand side. I am putting 6,000. Note 1.
Yeah.
Is it right? Note 1. How much? 6,000. Retained earnings are how much? 3,000. Is it? Retained earnings is how much? 3,000. Total it comes to how much? 8 plus 3 plus 6. 8 plus 3, 11, 11 plus 6, 17, 17. It comes to how much? 20,000. Is right? It comes to how much? 20,000. During the year, Anything is there during the year is that you don't have any share capital, you don't have any share premium. Revaluation surplus you have taken. Retained earnings are how much? We have to add current year profit is how much?
Uh, 4150.
4150. Anything is there, dividend, something? Interim dividend paid, it is there,
Yes.
is it right? Interim dividend paid. How much they have paid interim dividend? 1600. It is there. $1,600. Yes or no?
Yes.
Okay. How much you will get? Anything is there? Check again. Nothing. 8,000s, 3,000s, 6,000s. How much you will get? 3,000 plus 4150 minus 1600. Check. 5550. 20,000 plus 4150 minus 1600. 22,550. Is it there? Are you clear about this?
Yes.
Yes, Hussein Sumaya.
Yeah, doctor.
Fine. Okay. This is statement of changes in equity. Now, statement of financial position. Statement of financial position as on 31st December 2001. Now tell me, first non-current assets, how much we have to take? How much is the non-current assets?
5,000.
How much?
Land.
How much is that non-current assets given in the carrying amount is how much? Non-current assets given, how much is given? Left hand side, non-current assets carrying amount is how much?
35,000.
35,000. You have a net revaluation gain. Is that you have to take net revaluation gain. How much is the net revaluation gain?
6,000.
6.
6,000. Okay, net revaluation gain is how much? 6,000. It comes to how much? 41,000.
Okay.
Next. Okay, next. Anything is there? We have taken inventory, we have taken ordinary share fine, retained earnings, we have taken non-current assets, we have taken loan interest paid also. We will do that at a later stage. Anything is there? No. You take next current assets. In the current assets, what is there? You have inventory. How much you have to take inventory? How much you have to
Closing
take inventory?
The closing inventory.
28,000.
Huh?
28,000.
Closing inventory is how much?
16,000.
16,000.
You have all these adjustments. Who will take those adjustments, my dear? This is opening inventory, this is purchases, and this is closing inventory.
Yes, 12,000.
Okay, this is closing inventory. Okay, opening inventory plus purchases, closing inventory. How much is the closing inventory? Is it that I will put working one? How much is there? 12,000. Okay, next, what is the trade receivables? Check in the trial balance. How much is the trade receivables? Receivables and payables both are given.
10,450.
10,450.
150.
Is it 10,450? Next, is that put one cross mark? Okay, trade payables. We say cash and cash equivalents. How much is there? How much is the cash and cash equivalents?
8,100.
8,100. I am waiting for your response. Cash and cash equivalents. 8,100. How much you will get? Twelve, 22 plus 8, 30, 550. Check again, don't rely on me. 550, 171, 550. Total assets. Is it right? Total assets. How much? 71, 550. Are you clear about this?
Yes, doctor.
Okay. Next. Equity and liabilities. Is that equity and first you take equity, share capital. From the previous one only, we don't do anything. Just you have to take that closing balances, all those things. Is it right? Just you have to take the closing balances, all those things. 8,000. Share premium. 3,000. Revaluation surplus. 6,000. Retained earnings 5,550. Total it comes to how much? 22,550. Is it okay? Fine. Next, how much is the loan?
Current liability.
Yeah, how much is that?
Non working 2. 400.
8,000.
How much is the loan? 8,000. Okay. How much is the loan? 10% loan notes. Is it 10% loan notes? Non-current liabilities. Non-current liabilities. How much is there? 8,000. Anything is there? Anything is there? Deferred tax. How much is the deferred tax? We have calculated. Deferred tax is how much? How much is the deferred tax?
30,100.
No. They said that
600.
8,600. They said
Yes.
that how much is the deferred tax? Deferred tax. Deferred tax. How much? 8,600. Is it right? 8,600. Is it right? Deferred tax is how much? 8,600. Fine. Deferred tax is 8,600. Current year, okay? Is it clear about this?
Yeah.
Current liabilities. Payables are how much? Payables are how much? 29,000. It is there?
Yeah. Trade receivable and payable.
Payables are how much? 29,000.
29,000.
Is it right? Payables are how much? You can put like this. 16,600. Payables are how much? 29,000. Anything else?
Tax.
Yes. How much is the tax?
8,100.
Income tax.
One minute. Retain earning, loan notes, share premium, fine. Cash, inventory, payables is this much. Interim dividend, fine. Deferred tax, 8,000. Income tax, fine. Income tax. Current tax, how much you have to pay current tax? Income for represents and income for the current year is estimated how much? Current year is estimated how much? The income tax for the current year is estimated. Current year income tax
3,000.
3,000. Okay, 3,000. We have taken all the conditions here. Is that just check again? Where is the income tax we have calculated? Where is the income tax? Working 3.
Working 3, yeah.
Is it right? 3,000.
3,100.
Working 3 is right? 3,100. 3,100 we have shown there. Fine. Next, you have outstanding the interest charges. Is it there?
Interest.
Interest charges. How much in the interest charges? Working 2, I think so. Working 2. How much? 4. Working 2. How much? 400.
400.
Okay. Working 2 is how much? 400. 22,550 plus 16,600 plus 29,000 plus 3,000 plus 400.
Difference 200.
Huh?
6. There is a difference.
Why there is a difference?
Like Maybe I made the difference. 225. Okay. This is 225.
5
550. 22550.
32 400.
71750.
How much?
Let me check again.
66,550.
22,550 plus 16,600 plus 32,400.
100,000, 15, 550.
Any doubt?
$71,550.
Check again.
Yes.
Victor, can you go up?
Yeah, it's correct. Three to 400. Correct, doctor, correct.
Is it okay?
Yeah.
If you
Can we
have
go?
done
Yes.
this now, almost you have done a complete package of that. Okay, we have
Yeah.
done. Now if you are doing this problem and next problem again, we'll do the same thing. We are almost done with. In the examination, it will be given like this only. Is it clear about this?
Yes.
Little bit. You should ask me questions. I am waiting. The clarifications from your side in the WhatsApp group. Very simple. Okay. You should ask me how you got it. Immediately I will refer and I will get back to you with the answers. Any doubt? If you have seen the PDF file, you will not have any doubt because we have done each and everything. But in spite of that, while practicing, when you are revising, if you are getting doubts, it means you are understanding. Take my word. Any time, if you are getting doubts, means you are understanding. Is it okay, Hussein and Sumaya?
Eric, but can you go up to
Pardon?
profit or loss account? Can you go up?
In exam, how many questions like this they will give, doctor?
One question will be there like this balance sheet.
But completely everything will include or some of them?
It includes anything.
But most of the things?
Most of the things. What we are doing, it will include the
Yeah.
same thing.
We have to prepare the financial statement.
Yes. They will not give that much, but they will give, okay? Give it, is it?
Section C, right?
Yeah, section C.
Okay.
Is it okay, Hussein? Can I go down?
Yeah, Eric, okay.
Is it okay?
Yeah.
Fine. What they are saying, see the things. They are asking, see that, what they are asking? They are asking statement of profit and loss account and statement of changes in equity. They are asking only two things, okay? And a statement of financial position. Is it? And a statement of financial position as such. Okay. The directors, first you read the requirements. Okay, first you read the requirements. Then you see the directors have the buildings valued at 24 million. Is it? The director wish to incorporate this value in the financial statement. The building was originally purchased 4 years ago, depreciated. Original life is 20 years, which has not changed as a result of revaluation. Visor does not make a transfer to retain earnings in excess of depreciation. The revaluation will create a deferred tax liability. Plant and equipment is depreciated 20% on a reducing balance method. All depreciation should be charged to cost of sales. Is that all depreciation should be charged to cost of sales? How much is that? Fine, we'll say a liability of income tax for the year ended 31st December. A liability for income tax 12 million is required. Is that at 31st December the tax base is 7 million less carrying amount. Tax base is 7 million. Okay, that this excludes the revaluation of building. How much is there? The tax rate is 30%. Done. Only two adjustments are there. Okay, only two adjustments are there. And they are asking 291 and 292. Okay, next. $291 and 2. We have to calculate depreciation also. Okay, we have to calculate. Most important thing is depreciation. Is that most important thing is depreciation. Fine. First we will calculate. What we have done, we follow the same process. Here we follow the same process as such. Here divide the things. Statement of profit or loss for the year ended for the year ended 31st December 2008. Are you people are writing or just listening?
Writing, doctor.
Next, one by one. Okay, revenue. How much is the revenue? Revenue is how much? 190. Next, cost of sales, working one. Is it cost of sales, working one? How much is the cost of sales given?
$130,000.
Is it right? Given. How much is there? Given. Working one. How much is there? 130. Is it right? 130. Now the problem, now the issue is we have to calculate the, we have to calculate the depreciation, all those things. Is it right? We have to calculate the depreciation. Very simple, not that much. Is it right? Depreciation. How much is the depreciation? How much is the depreciation? They have revalued for how much? 24,000.
24 million.
And nothing is there. Is that buildings? Buildings. 25,000 is there. See the thing. 25,000 is there. Is it 25,000? 25,000 is the carrying amount. And the accumulated depreciation is how much?
5,000.
5,000. Is it? The accumulated depreciation is how much? 5,000. See the things. I will write here, okay? I will write here. Given is how much? Given is 25,000. Okay? Accumulated depreciation is how much? Accumulated
5,000.
depreciation is 5,000. Okay? Now, how much is the carrying amount? Carrying amount is how much?
20,000.
Carrying amount is 20,000. Okay? Carrying amount is 20,000. Fine. Now, what is the revaluation amount?
24 million.
Revaluation is how much? 24,000. They got gain or loss?
Loss. 25.
Carrying amount is 20,000. Revaluation is 24,000.
Yeah, 4,000.
What is 4,000?
20 minus 24.
Difference. I am not saying minus. I am saying difference.
Difference, yes.
I am saying difference. There is lot of, is it right? Difference is how much? Difference is 4,000. Is it? Difference is how much? 4,000. This 4,000 is revaluation gain. Okay? This 4,000 is revaluation gain. Now, depreciation will be done on what? Now I am revising chapter 2. So important is chapter 2. Think about it. Intangible assets.
It will be in revaluation amount.
It will be on revaluation amount. Is it right? Revalued amount divided by remaining life is how much?
20 years.
20 minus 4. 20. How many years are there useful life? 20 years.
20
Is that how many years are over? 4 years ago.
4 years. Yeah.
20 minus 4 means 24,000 divided by 16 years. It comes to how much? It comes to how much?
1.5.
1500. Okay, means there are two things we have calculated here. Is it right? There are two things. We have calculated revaluation gain and we have calculated depreciation. Okay, we have calculated depreciation. And we have to calculate depreciation on plant and equipment also. Okay, we have to calculate depreciation on plant and equipment also. Fine. Depreciation on plant and equipment. What is they say it is on the return down value. Okay, return down value on a reducing balance method. What is the thing? 20%. How much is the plant and machinery? Plant and machinery is 22,500. Depreciation is how much? 7,250. 22,250 minus 7,250. I am writing here only. Is it right? The plant and machinery is how much? 22,250 minus accumulated depreciation is how much? Accumulated depreciation is 7,250. Is that 7,250? 7,250 minus, it comes to how much? 15,000. 15,000 current year. Is it right? Current year depreciation at the rate of how much? At the rate of 20%. It comes to how much? 3,000. Check.
Yes.
Is it right? Depreciation 3,000. Okay. This has to be shown in, is it right? This has to be shown in cost of sales. This has to be shown in cost of sales. Is it? This has to be shown in cost of sales and cost of sales. Come back to this. Is it right? Come back to this. When you are talking in terms of cost of sales, what happens? Cost of sales is 130 plus depreciation on buildings. Is it? Depreciation of buildings 1,500. Depreciation of plant and equipment how much? 3,000. Is that depreciation on plant and equipment? 3,000. If you put the total 500 for 134 500. Is it okay?
Yeah, 134 500.
134 500. How much you will get? Difference 500, 9 minus 4, 5, 8 minus 3, 55. Check.
Yes.
Okay?
Yeah.
It's see, the more we do practice now, your confidence level will automatically increase. Okay, the more you do practice. Now till examination only practice, nothing is there. Okay, distribution cost. Distribution cost is how much? 7,100. Okay, put one cross here. Is it right? Administration expenses. How much is there? Admin expenses. How much is there? 23,200. Is it 23,200? How much you will get? Profit from operations.
$25,200.
How much? 25,200.
25.
Okay, 25,200. Anything. A loan interest 400. Is that loan interest for, see the thing, now you see, you have any loan is there? No, nothing is there. Is that you have any loan is there? No, there is no loan. Only they say loan interest. Is that they say loan interest only. Nothing is there, okay? Like previous case, minus loan interest. How much is the loan interest? 400.
400.
24,800. Check my calculations, okay? Is it right? This is 20,
Yeah.
20, okay, 24,800. This is profit
Before
before tax. Okay, profit before tax. Now, how much is the taxation?
Tax.
Taxation, how much?
Income tax 12 million. It's 12.
Carefully work it out, okay? Carefully work it out. I'm putting this here, okay? Is it taxation? Taxation, I'm writing here only, okay? This is which, how many workings we have done? We have done only one working, okay? Make
One.
it working two. Okay, making working two. See, is it right? Now, how much is there? They have liability for income tax for the year ended 12 million is required. Okay, liability, income tax. Is it right? Income tax liability. Is it right? Income tax liability. They have put it in thousands. Okay, here they have put it in thousands. Okay, 12 million. 12 million means how much? It put in thousands. Okay, 12 million. Is it okay about this, like this?
Yeah.
Next, the tax base net assets for how much? 7 million. Okay, the tax base is how much? 7 million. Fine. Now, this excludes the gain on revaluation. Okay, this excludes gain on revaluation. Okay, anything else is there? No. You see what is their income tax given in the question? See the things. Current tax, how much is there?
500.
If it is given on debit side, it is under provision.
Right.
If it is given on the credit side, it is over provision. Understand point? I am writing this. Income tax, trial balance. Is it right? If it is in the debit column, is it right? If it is in the debit column, it is under provision. If it is on the credit column, it is over provision. It will never change. Okay? It will never change. Keep this, remember this. Okay? Under provision. It is given on the debit side, means you have to provide. Is it? You have to provide 500. Is it right? Minus, plus, okay? Plus under provision. Plus under provision. Is it right? Trial balance. How much is there? 500. Okay, how much is there? 500. Next, how much is the revaluation they have done? Okay, under provision. Okay, next, here only you have to write. We should not write separately. Is it right? We should not write separately. How much is the trial balance deferred tax they gave you? Deferred tax they gave you what?
1,350.
1,350. Is it 1,350? Is it 1,350? Next. How much they say? Tax base is how much? 7 million. Is it right? Tax base is how much? 7 million. Is it right? Tax base is how much? 7 million. Net assets. Next. Anything else? Anything else?
30%. The tax rate.
Tax base is how much? Tax base is 7 million. Very solidly you have to. We are doing deferred taxation. When you are doing deferred taxation, they are testing us on this concept. Is that they are testing us on this concept? The tax base is how much? 7,000. They have mentioned very clearly. This excludes the gain on revaluation of the buildings. This amount is excluded. Gain on revaluation means you have to add gain on revaluation. How much we got gain on revaluation? See on the left hand side. How much we got gain on revaluation?
4,000.
4,000. Total how much?
3,000.
Total how much? 11,000.
11,000.
Is it right? Total how much? 11,000. What is the tax rate?
30%.
30%. It comes to how much? It comes to how much?
3,300.
3,300. Fine.
Yeah.
How much is the difference? Taxable difference, temporary difference. How much is the temporary difference? 1,350 minus 3,300.
3,300.
1,350 minus 3,300. How much is the temporary difference? Increase in tax. How much is the difference?
Yeah, 1,950.
1,950. Listen carefully. You have to think what we have done in the previous cases. Is it what we have done in the previous cases? Refer, test your understanding too. Test your understanding too. Okay? Increase in deferred tax is how much? 4,150. Revaluation, how much you got it? See the things. Is it right? This much increase in tax. Okay? This much increase in tax. In this, what you have to do, we have to calculate. Okay? We have to calculate what is amount related to the buildings and what is amount related to non-buildings. Okay? 1,250. In this, how much is for the buildings? 4,000. Is it right? 4,000 is the gain on buildings, yes or no?
Yes.
4,000. 4,000 into 30%. How much you will get? 1,200. Is it right? 1,200. This will be shown where? This will be shown in
OCI.
OCI. Okay? And what is the difference? 1,950 minus 1,200, 750. This will be shown in profit and loss account.
Yeah.
Understand what? This will be shown in profit and loss account. Okay? This will be shown in profit and loss account. This much we are doing. Understand point? See, we are digging so much and we are getting only some result. Okay? Means if you take taxation, income tax liability 12,000, under provision is 500, and current year profit and loss account will be how much? Profit and loss account will be 750. Is it? This plus this equal to how much?
$1,250.
How much? 1,000?
250.
No, 12,000 plus 500 plus 750.
14,500.
No, my dear.
12,000.
13,250. Again I am saying this. This is 12,000, this is 500, this is 750.
Yeah. Yes, doctor, correct.
Is it right? See the things, okay?
Yeah.
Now
Yeah.
test your understanding too. Test your understanding too. This is all related to what? This is all related to test your understanding to only this much. Is it? Only this much. Test your understanding too. Reference. Is that reference? Is that we have taken 1,950, divide 1,950. What is the related to OCI and what is related to profit and loss account? Is that what is related to OCI and what is related to profit and loss account? Okay? Then only it makes sense. Now, how much you have to show in profit and loss account? This amount we have to show where? This amount we have to show in profit and loss account. How much is the income tax? Income tax is 13,500. 13,250. Again, okay, I know this is, see, if this is the difficult things we are doing. I am saying very simple. This is the top notch. This is the end. Okay. Beyond this, they will not ask. Very simple. This is the end. They have given income tax liability 12 million. Okay. The point now, note number 2. Is that now they say that there is a under provision. Last still we have to pay last year tax 500. Okay. Current year tax plus last year under provision 12,000 plus 500, 12,500. Okay. Now coming back to this, that's over. Okay, that is over. Now they say that there is a tax base is there. Is that there is a tax base is there. How much is the tax base? Tax base is 7 million. Okay, tax base is how much? 7 million. Means on this you have to calculate tax. Next, is that tax base? You have done gain on revaluation. Gain on revaluation is how much on buildings? 4,000. Definitely, tax base plus gain on revaluation, it comes to how much? 11,000. On this you have to pay tax. Is it right? On this you have to pay tax. 3,300. Okay. Now, they have given the trial balance, deferred tax. How much? 1,350 credit balance. Is it? 1,350 credit balance. Is it? If it is given in credit balance, already there is amount is there. Is it? Amount is given in the credit balance. This is the trial balance. How much they gave? 1,350. Already it is there. 1,350. Now, current year how much? Deferred tax 3,300. Difference is how much? 1,950. This is the deferred tax which has been calculated net. On this deferred tax, two things are involved. What they have mentioned, they said that this exclude revaluation. Means 19,1950 have two different things. One is OCI, one is profit and loss account. We have to segregate. How we have to segregate? We have got revaluation gain 4,000 on buildings. On buildings 4,000 at the rate of 30%, how much is there? 1,200. This is in OCI. Total increase in deferred tax 1,950 minus 1,200 is related to the buildings. The balance 750 is related to profit and loss account. Total income tax liability is 12,000. Under provision is 500. Current year deferred tax is how much? 750. The total amount is going to be how much? 13,250. Is it okay?
Yes, doctor.
Is that same thing? We are not making any deviation. Okay, we are not making any deviation. Now minus 24,800. Is it? How much you will get? 11,550. This is called as profit for the year. This is called as profit for the year. Fine. Now, at the OCI, okay, OCI. Now, we are not changing the steps. Okay, we are not changing the steps. Revaluation gain is how much? Revaluation gain is how much on buildings? Is it right? On buildings. How much is the revaluation gain? 4,000. Minus. Is it right? Minus deferred tax. Is it? Minus deferred tax at the rate of 30%. How much? 1,200. See, we are showing 750 different, total 1,950, but we have to show different thing. How much is there? It is going to be 2,800. Total it 0, 5, 3, 1, 4, 1. This is total comprehensive income. Is it clear? Yes, Hussain Sumaya. Yes, Mazin.
Yeah, doctor, clear.
See, I am just go through it. Revenue, cost of sales, gross profit, distribution administration, profit from operation, loan interest. Only taxation you have to be very, very careful. Is it okay?
Yeah.
Can I go to the next one?
Yes.
Statement of changes in equity. Is it right? Particulars. What are the things? You have the share capital. Is it right? Share capital is there. You don't have share premium. Okay. You have retained earnings. Is it? You have retained earnings. Before retained earnings. Is it? Before retained earnings, you have there is a revaluation surplus. Is there? Is it? Revaluation surplus. Is it? Retained earnings total. Opening balance. How much is the opening balance? 30,000. Okay. Revaluation surplus is not there. Retained earnings is how much? Retained earnings is 4,150. 34,150. Okay. 34,150. Add current year. Is it? Current year. Nothing is there. Share capital. Revaluation surplus. How much is the revaluation surplus?
4,000.
How much is the revaluation surplus?
4,000.
We have paid tax now.
Oh yeah.
We have paid tax now. How much is there?
Yes, yes.
How much is there?
1,200?
2,800. Is it? How much we have paid? See, it is there. It is there.
No. Oh, okay.
Okay. Next.
Yes, yes.
Profit for the year is how much? Profit for the year is how much? 11,550. Okay. Profit for, we should not take TCI. We have to separate it. Okay. We have to separate it very clearly. We are not changing rules now. Is that we'll never change the rules. Whatever we are doing, we will continue it all through the time, the same process. Is it right? 11,550 plus 2,800. It comes to how much? 14,350. Any dividend paid?
Nothing.
Nothing. Okay.
Closing balance.
30, 2,800. Is it right? 4,150 plus 11,550. 15,700 and 34,150 plus 14,350.
500.
48,500. Is it clear to you?
Yes.
Yes, Hussein. Where are you, Hussein?
Here, sir.
Is it clear to you, dear? Is it okay?
Yes, doctor, it's okay.
Now, can I rely on you that you will do statement of financial position and send me the screenshot of this? Can you try this? Try, no problem. Is there, can you do this?
Yeah, we'll try, doctor.
Okay? Try it.
Yeah.
Right or wrong, don't worry about that.
Hmm.
Okay? Right or wrong, don't worry about that. See what you have to do, as simple as that. Okay? What we have to do, we have to take buildings. Buildings
Yeah.
we have calculated. Is it right? We have calculated somewhere. Where we have calculated? We have calculated buildings. How much? Buildings is how much? See the things. Is it right? We have the buildings. Is it right? Non-current assets. I am not doing total. I am putting the numbers. Okay. Buildings will be how much? Buildings will be in millions. Okay. In millions. Fine. It will be in millions. Okay. 1,000 is fine. It buildings will be how much? I will take what? We will take revalued amount. Okay, we will take how much? We take the revalued amount. How much we have calculated on that revalued amount? Depreciation on buildings
1,500.
is 1,500.
500.
Is it right? 1,500. Fine. 1,500 is the depreciation. I am not doing total. Property, plant and equipment. Is it plant and equipment? How much is the plant and equipment? Plant and equipment is 15,000
15,000. Yes.
minus depreciation
Three.
is how much?
3,000.
Minus depreciation is 3,000. Is
Yes.
it right? Minus depreciation is 3,000. Is
Yeah.
it? Minus depreciation is 3,000. Buildings is over, plant and machinery over. Then you will have inventory, trade receivables, trade payables, bank balance. Is that? Then you will have current assets, inventory. Straight away, nothing is there for inventory. Okay, nothing is there for inventory. Inventory is how much? 27,400. Is it right? Inventory is how much? 27,400. Is it? 27,400. Receivables are how much? Receivables and bank. How much receivables and bank?
Receivable and banks.
16,500. 16,500. Oh, very interesting. Good. I really.
Trade receivable.
16,500. Okay. 16,500. Now, what is the bank? Why they have given bank?
1,100.
Which side? Debit or credit side?
Credit.
Credit. It means overdraft.
Yeah. Overdraft.
Okay. It means what? It means
Overdraft.
current liabilities. Okay. Okay. Current liabilities. Current liabilities will be what? Payables. How much is the payables? 13,500. Is it there?
Yes.
13,500. Very interesting. 13,500. Overdraft is how much?
1,000.
1,000. Okay. Next, you will have
Yeah.
income tax. Is it right? You have income tax. In here I'm just writing. Okay. You need to fill this one and you have to send me. Okay. Equity
Okay.
and liabilities. Equity and liabilities. Take equity. We have done in the previous case. Okay. Take equity. 30,000. Is it 30,000? 30,000 revaluation surplus is how much? Revaluation surplus is how much? 2,800. And retained earnings is how much? 15,200. Sorry, 15,700. 15,700. Total it comes to how much? 48,500. Are you clear about this?
Yes, doctor.
Non-current liabilities. Okay. Now
Yeah.
It comes to how much? 24 minus 15. Check again. 22,500. This is 12,000. Is it right? This is bank. How much? No bank is there. Check what we have covered.
Got it.
Check what we have covered, all the things or not.
1,000.
Administration, loan, buildings, inventory, trade receivables, trade payables, bank, equity, retained earnings, deferred tax and current tax. How much is the current tax? Current tax is how much?
Mhm.
Current tax is how they say 12 million. Is it right? They say how much is the current tax? Current tax is 12 million. Is it okay with you?
Yes, doctor.
Once you have done this, is it right? Once you have done this, you will fill these columns and send me the screenshot. Is it okay?
Yes.
In Excel. Okay? In Excel. Fine?
Okay.